You ever get the feeling that the global financial system is like a giant, elaborate Jenga tower? Well, there are some serious whispers in financial circles about a move that could pull one of the most important blocks from the bottom: America's colossal national debt. This isn't some abstract problem for economists to worry about. We're talking about a potential financial tidal wave. And in this video, we're going to trace that wave from the highest levels of global power right into your bank account, your savings, and the biggest bill most of us pay every month: the mortgage. As of late 2025, America's national debt has soared past a mind-boggling $38.4 trillion. To put that in perspective, that's around $285,000 to $300,000 for every single household in the country. But the real story isn't just the number. It's about who's holding the IOUs. What happens if U.S. government bonds, long considered the safest investment on earth, get turned into a weapon? A coordinated move could trigger a crisis, and the first casualty would be the affordability of your life. Stick with me, and let's unpack how this financial doomsday scenario could actually happen. To get the threat, you have to understand the supposed weapon: U.S. Treasury securities. For decades, these have been the bedrock of global finance. When the U.S. government needs to borrow cash, it issues these bonds. Countries, companies, and your own retirement fund buy them up because they're seen as the safest asset on the planet, backed by the full faith and credit of the United States. They are, for all intents and purposes, the world's savings account. So who owns all this debt? While Americans hold the majority, a massive chunk, somewhere between $7.5 and $8.8 trillion, is in foreign hands. Japan is the biggest foreign creditor, holding between $1.1 and $1.2 trillion in U.S. bonds. The United Kingdom and China are also huge players. China's holdings are in the $700 to $800 billion range, though they've been slowly selling. The UK's position is a bit more complicated, as London is a major financial hub, but their reported holdings have at times topped $865 billion. Add in allies across Europe like Belgium, Luxembourg, and France, and you're talking trillions held by foreign powers. For years, this has all worked on trust, but the game is changing. Finance isn't just about spreadsheets anymore, it's about power, and a dangerous line has already been crossed. The real turning point was the freezing of Russia's central bank assets after the 2022 invasion of Ukraine. Around the world, roughly $300 billion in Russian sovereign assets were locked down, with about 210 billion euros of that sitting in Europe. By late 2025, EU leaders are in deep talks about taking the profits from these frozen funds and using them to help Ukraine. No matter how justified, that move shattered a long-held taboo. It showed that sovereign assets, a country's rainy day fund, aren't sacred. They can be grabbed and repurposed. That sent a quiet but chilling memo to every country out there. Your savings, if held in someone else's currency, can be used as a weapon against you. And if it can be done to Russia, it could be done by anyone with enough leverage. This creates the motive for our nuclear option. Imagine a group of foreign powers deciding to weaponize their massive holdings of U.S. debt. This isn't just one country selling off some bonds. That happens all the time. This is a coordinated, politically motivated dump of U.S. Treasuries all at once, designed to trigger a panic. Here's the chain reaction, the shockwave that would travel from Wall Street to your street. Step 1, the bond market panics. A sudden massive sell-off floods the market with U.S. bonds. Just like with anything, when supply goes through the roof, prices collapse. To convince anyone to buy these suddenly risky bonds, yields, the interest rate the bond pays, would have to skyrocket. Think of it like a seesaw. Bond prices go down, yields go up. The 10-year Treasury yield has been floating around the 4.18% mark. In a full-blown panic, that could easily double or triple in days. Step 2. The U.S. government's finances break. The U.S. government is constantly rolling over its debt. paying off old bonds by issuing new ones. Suddenly, it would have to borrow at these insane new rates. Keep in mind, interest on the debt is already a gigantic expense. For fiscal year 2025, net interest payments are projected to cost nearly $1 trillion, which is more than the national defense budget. The CBO projects interest costs will officially cross the $1 trillion mark in 2026. Now, this next part is a speculative worst-case scenario. But if borrowing costs doubled overnight, the interest payments would become totally unsustainable. The government would face two nightmare choices: default on its debt, shattering the entire global financial system, or force the Federal Reserve to print trillions of new dollars to buy the bonds, which could risk hyperinflation. Step 3, the shockwave hits your wallet. This is where it gets personal. The interest rates on nearly every loan you can think of are tied to those U.S. Treasury yields. Your mortgage. 30-year mortgage rates follow the 10-year Treasury yield. In late 2025, average mortgage rates are in the low to mid 6% range. In this crisis scenario, they could surge to 10%, 12%, or even higher. On a $400,000 loan, a jump from 6.5% to 11.5% means your monthly payment explodes by over $1,800. The housing market would seize up and activity would plunge. Your credit cards and car loans. Think your credit card APR is high now at around 22%? Imagine it jumping to 35%. Car loans would follow, making basic transportation unaffordable for millions. Your job and your savings. Businesses would face the same credit crunch. They couldn't borrow to expand, invest, or even make payroll, leading to mass layoffs. At the same time, the value of our retirement accounts, 401ks and IRAs full of stocks and bonds, would crater as financial markets panic. This isn't some far-fetched fantasy. It's an extreme but plausible scenario that shows just how fragile the system can be. The very asset that was meant to be the world's safest could become the trigger for its collapse. Okay, this is a critical moment to connect the dots. If you're finding this breakdown valuable for understanding how the big picture affects your money, do me a favor and hit that subscribe button. It helps you stay ahead of the curve and helps the channel keep breaking down these complex topics. So what can you do? You can't stop a geopolitical showdown, but you are not helpless. The answer is to make your own finances as resilient and anti-fragile as possible. While this nuclear option is a worst-case scenario, smaller shockwaves happen all the time. It's always smarter to prepare for a storm than to just hope you never see one. This isn't financial advice, but a framework for building resilience. Wage war on high-interest debt. In a world of shaky interest rates, variable rate debt like credit cards is a ticking time bomb. Paying off a card with a 25% APR is like getting a guaranteed 25% return on your money, tax-free. No investment can promise that. Wiping out that debt is step 1 to taking back control. Fortify your cash flow. Your income is your number one financial tool. In a shaky economy, having a secure and resilient income is everything. That means becoming indispensable at your job, learning high-demand skills, and maybe even building a side hustle for a second income stream. Cash flow is the oxygen that lets you breathe during a crisis. Rethink safe assets. For 40 years, U.S. bonds were the ultimate safe investment. The whole point of this video is that this idea is now being challenged. This doesn't mean you should panic and sell everything. It means it's time to get educated on the history of money and what has actually protected wealth through chaotic times and currency devaluations. This includes understanding the role of tangible assets like real estate and precious metals, as well as smart global diversification. The key is to do your own homework and not keep all your eggs in a basket that might be showing a few cracks. The world is changing. The era of predictable financial rules and unbreakable trust between nations is giving way to something new. Geopolitics and money are tangled together in ways we haven't seen for generations. That massive U.S. national debt isn't just a number on a spreadsheet anymore. It's a vulnerability. It's a direct line to your cost of living, your job, and your dream of owning a home. The mainstream news usually waits until the hurricane is offshore to start reporting on it. My goal here is to show you the storm clouds forming way out at sea. By understanding the threat, you can take steps to prepare now. You can build your own financial ark, not out of fear, but out of foresight. Because in a world of uncertainty, the person who is prepared is the one who will not just survive, but thrive. What's your biggest concern when you hear about these kinds of economic threats? Let me know in the comments below. And if you found this insightful, please share it with one person you think should see it. Thanks for watching.